Hi everyone, it's Sonal here, and Ken's asked me to do a little voiceover on the DAX planning that I posted yesterday, so here it is. As part of the planning and prep work for the intraday session with Eric and Jeff in London, we're starting to take a look at the daily chart now for context and trade location. In particular, want to be more aware of the potential setups that higher time frame traders might be looking at, as well as levels of support and resistance that we ought to be aware of during our active trading window. With some luck and timing, we're hoping to be positioned and poised for to take advantage of moves that the higher time frame guys get involved with, at the very least to be alert to areas of chop and noise. So to give you a bit of insight into how I am starting to approach my planning process, I'm looking at the daily chart. This is the daily chart with the close of the 29th of April, that's a Thursday, planning forward into the morning session of the 30th of April. And all I'm really doing is looking to see what stands out, what jumps out on this chart. And my initial thought is I think we're at somewhat of a critical state, with price having moved from Z3 to Z2. Tested down with a red doji green and a potential go signal, a regression line crossover outside of the river, with the RL10, the baby dragon, and the RL30 all inside of the dragon, and the dragon itself sitting on the RL30, a definite critical state. We've got the RL270 gradually trucking down with a round number, and this 12,650 level is actually the 200-day moving average, which isn't plotted on this chart, but it's definitely there. An upward moving Bollinger mean, a slowdown on the descent of the RL90, and a gradual upward move. And again, not shown on this chart is the MACD indicator, which crossed over the zero line on the 12th of April. Thursday's bar ended almost as a doji, though not technically a doji, but with long wicks either side. And so I asked myself, what would a higher time frame trader be stalking here, and how would they get involved? And so the first answer is a potential P1 for the reversion to the mean guys with various targets, or a P1 fail, pocket long, for the guys that believe in the upside, or just more consolidation. This is potentially just a squeeze through this level here. To try to make sense of this moving into the morning session, as in what does this all mean for me right here, right now, I decide to take what is starting to look quite busy and move it over into a blank piece of paper and redraw levels that I feel are indicate support and resistance that I want to be aware of, and then almost like a traffic lighting approach that I've seen Ken do, which helps simplify questions in my mind, such as where would I like to be long, where would I like to be short, where could this bounce, and where could my trade idea fail. So logically speaking, if I believe in the long, I'd like to be long on the break of the high of the previous day in a green zone. And where ought I take shorts? And logically speaking, I should be looking for shorts below the previous day's low. But there's this section here, and when I think about it, if in practice, if I were to take a long above the high of yesterday, that only gives me 20 points before I hit the first level of major resistance, be the 200-day moving average at the 12,650 level. So what do I want to do with that? Does this mean I don't take longs? And the answer is no. I don't want to miss out if this continues to fly. So I start to position myself with more ideal locations that I'd want to be taking longs in. So I'm looking for intraday long entries to get me in ahead of a break of yesterday's high of day. And then I want to be ready to run a battle drill and add another position at yesterday's high of day. And I'll practically approach that by putting that order in and seeing if I get triggered. And if I am, I'm looking for follow through, and if I don't get it, I'll be closing the trade out. And I'll do something similar here above that 650 level. This orange zone here is, I anticipate to be a sideways chop area, but if price did come down to that level, I'd be willing to try a low risk entry long to build with battle drill potential in the same way. At the same time, I'm not going to be surprised to see failure if we even get there at the 200-day moving average or yesterday's high of day and so on and so forth. And therefore I'm aware that there may be people on a higher time frame building positions into a longer term short. Does this mean that I take these trades? Maybe yes, maybe no. And my plan going in on the Friday was if I were to take a short, they would just be tactical plays, harvesting quickly, because I'm personally positioned for a long side move. On the other hand, if I witness a break through this red zone here, then I'd be trading a belief that the higher time frame guys are now activating a P1 short with the universal entry, and I'll be more willing to take the short and build positions with a battle drill, but keeping an eye on the fact that it could just bounce and head back up again. And if it did that, I'd be looking at longs from there upward. There is always the possibility that it's not going to do any of this, and we're just going to go into a sideways consolidation. But when I look at the potential of that and the risk, I much prefer to position for the breaks and see what happens. It's just the way that I trade. Anyway, that was my plan for the beginning of the day. I'll let you guys take a look to see what actually happened in the chat room. I hope it gives you a bit of a portal into my thoughts, and I hope it's helpful. Okay, see you in the chat room.